Good afternoon, everybody. Thank you for coming today, and welcome to another select stream. So I'm Tess, and I'm joined by my co-host and colleague Jig, and also joined by a very special guest, who is Mark Weeks-Pearson. He is an accountant with Ashdown Hurrey Chartered Accountants, who are based in Hastings, and he has come to talk to us today. We're very grateful and excited to hear what he has to say in the finance world. So if some of you may remember that he came and joined us as a guest this time last year, so he's back by popular demand, and actually this is a very timely webinar where we'll be talking about finance and kind of cost saving tips with the budget announced yesterday, and also just with kind of all the ups and downs that we're facing at the moment, with price increases across the board, obviously the impact of Russia, the impact of Brexit, and obviously the pandemic as well. So with energy prices kind of going up, that's obviously having an effect on people personally, but also from a business perspective. So we're going to be covering part of that, talking about the budget, I suppose, in today's webinar, and also looking at how finance has gone digital, how tax has gone digital over the past few years, and how you can make sure you know how to use that. So cloud accounting, which helps to make your accounting easier, making tax digital, and then also some cash flow tips. Now, Mark's got to do very well here, because as some of you may have seen, Martin Lewis, money saving expert, even he said himself on the BBC earlier this week that, or last week, that he had kind of run out of ideas for cost saving tips. So I'm sure Mark can pull a few of those together, and he's back now. So I will hand over to Mark, who's going to start taking you through today's webinar and talking all about finance. So thank you very much for being here, Mark. Have you got your charger now?
Taking my energy saving tips a bit too far by trying to run off my battery. I have, thank you.
Great. So I just kind of gave everyone a bit of a rundown of what you'd be talking about today. So yeah, just feel free to make a start.
Smashing. I do have a PowerPoint, so I'll have that one at times. Some of the points are similar to what I covered a year or so ago, but like Tess says, quite a topical time at the moment in the world of tax with the spring budget yesterday. So I've also put a slide together for that and a few pointers, and I'm happy to take any questions. Fingers crossed I can answer. So please put those in the chat. Right. This is where I then fail the IT. We'll be fine.
No, we did a practice earlier on this, so you'll be fine.
Just looks a bit different now. Oh, here you go. We're doing all right. Actually, by ways of introduction, I should probably say that yeah, my name is Mark Weeks-Pearson. I'm a chartered accountant and one of the directors at Ashdown Hurrey Accountants and Business Advisors. We're based on the south coast with offices in Hastings and Bexhill. And to be honest, since COVID, or even before really, we've always had clients nationwide. I think post-COVID, the technology has just meant a bit less travel now for us all, but we service a wide portfolio of clients all across the country, across all sectors, through to sole traders, all the way up to large limited companies with multi-million turnovers that require audits, as well as all the usual tax advice and accountancy advice. So I'll try and pitch this at everyone. So whether you're, for example, a landlord maybe with properties, or whether you're a manufacturing business perhaps, or a consultancy of some sort, I'm hoping that there's something in here for you all. Let me just pop this into slideshow mode. There you go. So I'll probably run through some of the Making Tax Digital fairly quickly. It's been an expression that's been in use for a few years now. And funnily enough, because of COVID, it keeps being delayed. So a lot of clients that we've got, particularly the smaller ones, have still managed to avoid Making Tax Digital and what that means. But in a nutshell, it basically means the way that you keep your accounting records needs to change. Most businesses have been doing it for years, but you really need to be ensuring that you're using software at the end of the day. And I believe I have a little slide here with some examples of software. So some of those may look familiar to you. Larger companies tend to use Sage, and Sage was the market leader, I would say, for many years. So certainly when I started my career 20 years ago, Sage was at the forefront of accounting and bookkeeping software. QuickBooks always existed as well, a bit more of an American sort of twist to QuickBooks. The terminology and language used is certainly American. And they tend to, well, both those companies have always had high advertising spend, I'd say. And in the last year, I've certainly seen a lot of QuickBooks adverts across social media and on TV. Two of these guys on the left, Free Agent and Xero, are certainly quite new to the market. When I say new, I probably mean in the last decade or so. Free Agent is one that has actually been bought out by NatWest Bank. So if I've got clients coming to me and they're new to business, it's often a recommendation, go to NatWest for your bank account, and you can get Free Agent as part of your package. So you're actually getting something for your bank fees. But most of these packages start anything from sort of £15 a month. We often try and acquire Sage, for example, for our clients because we have a discount. And they all offer slightly different twists, a bit like cars, I suppose.
Would they be like, are they sort of more helpful for different businesses? Is one better than another for like?
Yeah, it's a lot. Some of it's personal opinion and style, I suppose, a bit like clothes. So they all do, most of them do the same thing, but the key differences, I would say, Free Agent, for example, probably for smaller businesses. So I've got quite a lot of IT consultants, for example, sole traders, and for them, yeah, they can raise their sales invoice in it, they can record their purchases, and they don't need much reporting, nothing too fancy. But if you're a bigger business, you really want to be monitoring your performance and how you're doing and what you're spending. So if I've got a housing developer, for example, with, I don't know, £10 million of spend going through the books because they've got 3 or 4 different housing plots on the go, you probably want something more like Xero or Sage or maybe QuickBooks, just because you can do divisional reporting. So it could be that you're a manufacturing company and you've got 4 factories and you want to run a report on how each factory is doing.
Right, okay.
How your business as a whole. Yeah, so definitely for a bigger business with reporting requirements, and it's whether, I mean, you know, large businesses need to report to their shareholders on a regular basis, you know, PLCs. So the likes of those businesses normally use Sage. And Sage have now got a cloud version that's internet based called Sage 1. But yeah, Xero is one that we use an awful lot. And another slide we'll look at soon. There's so many add-ons now. So if you're into your IT and saving time, Xero, I think
we are.
Over. You would be, yeah, definitely. And Xero have taken over the market, and Sage have been trying to keep up, to be honest. So yeah, Making Tax Digital, I would say, is really about these sorts of programs. And there are other software providers out there, but day to day, these are the ones that we see most clients use, which I think is a good sign. Flipping back probably a little bit to some of the boring details of it, I guess, or the reasons why it exists. And this slide really explains it's part of the government's plan. And really, it's to help businesses and individuals get their tax right, which of course makes the taxman happy. So they're pushing for this digital software to be used. I mean, one thing the software does nowadays is it links directly to your bank account. So the bank account feeds into it every day. So therefore, in the past, you could argue if you had an accounts team manually entering bank statements, bank statement arrives in the post back in the old days, they'd have someone that would look at every transaction, type it into the software. And of course, you could put the wrong figure in, the wrong description of who it went to. Hopefully, if you were well trained, you'd check at the end and check your bank balance agreed, and any accountants or bookkeepers that might be watching this.
But I guess it's still open to like user error, human error.
Yeah, and that's what actually, that's a good point. This takes away the user error. There's always an element of it still, and there can be an IT error, of course, but
yeah,
it's a big part of it, and they want businesses to raise their sales invoices in the software. So rather than using Word, for example, in another package, use the software. If you're not using your accounting software, they probably want you to download something from your sales program to ensure user error just sort of starts becoming less of a thing. Because again, years ago, you'd probably type an invoice up in Word and post it to the customer. And then, of course, you enter it in the accounting system. It could say something different. It could say the wrong amount. So, yeah, there's a little bit of concern among some clients that it's Big Brother keeping more of an eye on them. And I think that is to an element true. However, it's got its advantages. So it will help your business be more efficient. So, we've got to do this. Put your hands up, sort of relax, chill out. You've got to do it. And actually, the benefits of it will help your business run more efficiently. It might mean you need to spend less time yourself if you're a smaller business and you're doing the books yourself. It might mean you save money with your bookkeeper. It might even mean you save money with your accountant. So in some ways, we, as an industry, we were worried that it would take away business from us. But at the moment, we're finding that we're really busy actually helping clients set up their accounts. We advise them which software to use. And some clients, especially bigger ones, they don't want to be dealing with this sort of thing. They want to be getting on with their own business, making money. So our service, we find now, we tend to set up a lot of the automation. So the bank feeds start appearing. The client's normally happy to go in and raise their sales invoices. They need to do that anyway to get the money in, and we perhaps go in and tidy up for them. So rather than a client relying on a bookkeeper or an accountant to do all the work and bring a big box of paper records in, a lot of the automation now takes at least half the work away, I'd say. And you just need someone with a bit more higher level knowledge and skills, IT wise and accounting wise, to tidy things up. And we're incredibly busy with that sort of work at the moment. Even clients with their own accounts departments, their teams need support sometimes. So we find that's where we're really helping clients, and I think it will continue. So when does it actually come in? So making tax digital, it does add a bit of administrative burden. So for example, with filing your VAT return, most of our clients have been filing in a digital way already, but you have to, I bet this is where I'm a bit out of my comfort zone. So some of my colleagues spend a lot of time registering clients. So on the HMRC system, making sure there's a certain box ticked and a certain login here, a certain password in your software. And that's the key part. And once you've done that, you actually then need to submit your VAT return through the software. We are still helping a few clients who give us the VAT return figures, and we have to use a software that we use for our own internal purposes, let's say, to file the figures on behalf of the client. But again, it has to have certain links to the data. So we still need the client to give us at least an Excel spreadsheet with a list of all the transactions on. So what we're trying to do is push clients into the software. You run the VAT return, you press submit, and Xero sends it off. That's what this exactly is requiring you to do. And as you can see, that
you don't have to do something twice, because if you've had to already put into a spreadsheet, then you have to. So to start off
spot on. And we have, I think, so many clients. Things are being repeated, sometimes by two different people in a firm, because It might be that someone running the sales side of things in an accounts department, of course, has all the sales invoices to hand, and then the person running the VAT return may land up inputting all those figures in rather than downloading something that their colleagues already got in the software. It's a joined up approach, I think, is a good way of looking at it. And again, yeah, potentially saves time and error. So yeah, most clients are doing it, but from April 22, all VAT registered businesses will need to start using the software. And I'm hoping that we're there, because if we're not, I'm worried we'll be getting a lot of calls from
yes,
people we don't even know that are in need of desperate help because they've either got an accountant that hasn't advised them, or perhaps they've been trying to muddle through themselves. An interesting one that's come out recently is that landlords, for example, have got another couple of years, so they're delayed until 2024. And landlords is an interesting.
Why have they done that?
Good question. I mean, landlords in theory, you might only have a couple of rental properties, but you can obviously have quite large portfolios. So is a landlord a business? In a nerdy way, I'd call it's an investment income that you've got. But obviously, when you think about it, a lot of this is also about getting the tax paid. So HMRC want the tax quicker. So we do think that the way this will go, perhaps in a few more years' time, is rather than paying your tax once or twice a year, you'll be submitting figures. So VAT registered businesses every quarter. So they won't just get your normal VAT return. What they will be wanting in the future is, it's almost like your profit and loss figures. So they want a list of all your income and expenses. And from that, we think they'll start making assessments to say, you need to pay some money every 3 months to us, rather than for most companies at the moment, it's once a year. I mean, for bigger companies, they do pay quarterly now. So really, I think this is a bit of a cash collection exercise ultimately as well. And for landlords.
Would that still be, it's based on the previous year's?
You've got a bit of knowledge there, Tess. Yeah. Yeah, so at the moment, for individuals, for example, and most landlords do have property in their own name, they would pay tax every January, and that January payment does involve an element for the current tax year. So our clients that have been paying their tax 2 months ago, that was the balance of what they owed for the year ended 5th of April 21.
Yes.
But it also included an element, a first payment towards April 22, because actually the tax man, he doesn't want to wait a whole year or so until after the tax year that's finished. So yeah, currently that has been based on the previous year's amounts. This is an interesting one. So for any of you directors out there, you're filing a personal tax return as well with dividends on and in your salary. So the payment on account is based on the previous year. However, if your business has taken a hit and the profit's not been there to pay yourself a dividend, or your rental property's been empty for a while, or for example, for whatever reason, you've just not been taking the same money from your business, you can apply to make that payment on account smaller. So there is some flexibility with what you pay, and a lot of clients sometimes make it smaller because they're having cash flow issues, when really they're still taking the same money, which is a bit naughty. So the tax man charges you interest if you shouldn't have reduced it. But remember, it's all timing. So when you get to the end of the year and file your tax return, you do get that money back if you've overpaid. But we sometimes help clients try to reduce that payment on account if they're struggling with their cash flow, think they might earn less. But all they have is more tax to pay the following January when the balance is due for the year that's just gone. So it's it always catches up with you, unfortunately, the tax man, as we all know. So yeah, landlords, and to be fair, my knowledge, I'm not quite sure, but I think for most self-assessment taxpayers, there might be a requirement for everyone to start filing some kind of return every 3 months. So even if it's just dividends on it, for example.
Oh wow, okay.
Yeah, don't quote me on that. It's not been something we're working on yet with clients. We're trying to sort all the VAT registered ones out. But had it not been for COVID, I would imagine that a lot of this would have been moved forward quicker. But obviously the government have had other things on their agenda, haven't they? Right. So that's covered some of the software as well and the reasons behind it. We have helped quite a lot of clients move software. So this might be because they just find the current software is not great. It's making tax digital compliant, but for example, it doesn't talk to their other in-house software, their CRM system, or it doesn't talk to the system they use to produce the sales invoices. You know, big companies don't always rely on the accounting software. They might have their own CRM system that they generate sales invoices through. So Move My Books, which was on that last screen, I think it costs about £60, and you upload your data. I might be overselling this, and you upload your Sage data, and I want to say within a couple of days that can then appear if you decide to go and use Xero, for example. So yeah, there's some great apps out there, and some of these add-ons that you've got on the screen, which is sometimes a reason why people move. So you might think Sage is a bit clunky, not doing what I want it to do. I'll use Move My Books, get all my data into another form of software, and I can start using, I mean, receipt banks on the screen there, for example, Clockify, HubDoc, Chaser. Some of these, I think, you know, they sort of say what they do. So Chaser, I believe, is a way of chasing money from your customers. Automated system, sends out reminders, and you can set what you want sent out. For example, do you want a statement? Do you want them to get another invoice? Do you want a stroppy letter, for example, that threatens legal action? Clockify is a great one if you're a business that runs on selling time, so probably a bit like accountants.
Right, okay, yeah, so you're billing per hour.
Timesheet based, basically, yeah. And I believe my younger colleagues would be better to present on this. I might bring them along next time. It's a way of recording the time that's been spent by your staff. I mean, I've got some people in construction, and trying to get their employees to say what they've been doing and where can be a nightmare. So I believe it's a bit more phone based. There's an app. Yeah,
so just almost, rather than filling in like a paper timesheet, yeah.
And it sends you reminders. So if you've not filled something in, you know, you'll get reminders like pop-ups.
It's like, are you working today? Make sure you fill this form.
Yeah, that kind of thing. And then that can feed through into your accounting data. And of course, once it's in the accounting data, you know what your costings are on jobs. You can put in charge out rates and everything like that. So it helps you work out what you're spending on labour, really. HubDoc and Receipt Bank, the ones on the top left and right. I've got a short video, I think, on HubDoc that I will try and share with you. This is where my IT starts going wrong. Come out of that one. See, I think, yeah, not sure if you guys can see this. I'm on Wi-Fi today, sorry, it's a bit slow.
Yeah,
we're used to the technical hitches.
Oh, yeah. Let's have a look. Give my voice a break as well, so it's only 40 seconds.
For small business owners who struggle to keep up with back office administration, and accountants and bookkeepers who have to chase after client bills and receipts, HubDoc and Xero make document collection, data entry, and bank reconciliation a breeze. HubDoc gives you the tools to quickly upload bills and receipts using your mobile device, desktop, email, and scanner. Once documents have been uploaded into HubDoc, the key data is extracted and synced to Xero. HubDoc transactions are automatically matched with bank feed transactions in Xero for one-click reconciliation, so you get better data faster and win back time to do beautiful business together. Get started with HubDoc and Xero today.
Cool. Makes sense.
Am I back?
You are. You're back in the room.
How do I turn off presentation mode? Sorry, quickly.
You're just. Do you mean you want to share your slides again, or?
Yeah. And can you see me okay? You can see me.
We can see you. You just need to go to the share tray again.
Brilliant. Are we back?
That's it. Yep. You just need to go to slideshow mode.
Lovely.
Perfect.
So hopefully that video gave you an idea of what HubDoc and Receipt Bank is similar, and that just really automates the whole process of recording your purchases and expenses. I have to admit, most clients tend to still stick to the old-fashioned way of typing in a purchase invoice manually, but we are seeing, I think, the younger generation using their phones and these apps to record the invoices, get it into their accounting data, which we love. We log into their Xero, we can see the invoices, they don't need to send a file to us with them in, and actually the MTD element, it takes away user error because these programs read on the video. It's very clever.
It does seem a lot easier.
Yeah, I've got some people swear by it and don't do any manual entry at all anymore. So yeah, times are changing. Right, I know time's slipping by. This is something I did cover last time, but is still relevant. And you've got 1 year left. So this is more on the money saving side of tips. So we're moving away from making tax digital. Super deduction. It was announced sort of amongst COVID really, and really to encourage businesses to invest. And basically for anything you invest in your business on plant equipment, machinery, so it's items that, you know, we call assets, rather than it saving you for a limited company 19p for every pound, it will save you 25p, which obviously if you're spending a lot of money on new vans, whatever it might be, IT, can really help save you some tax. So I think my key tip there is if you've got to invest or you need to invest, do it before March 23. So you've still got a year.
Got a year left, yeah. Year
left. Whether they extend it, you know, we might find out in October. They might bring some other kind of relief in instead. But yeah, it's called 130% capital allowance because it's like you've, rather than spending £100 or something, it's like you spent £130. So taxman's giving back a bit, which is good. Unfortunately, at the same time, a lot of the reliefs are ending that they did give us during COVID. So hospitality businesses, crikey, I think at one point last year they benefited from 5% VAT. So while we didn't see the saving on that when we bought a cup of coffee, for example, or went out for lunch, we were still probably paying the same price. It meant that for the business, they didn't have to pay the VAT man so much money. They got to keep more of it.
And I guess sort of clawing back some of that money that they'd lost from being closed.
And to be fair, they're not increasing VAT rates. They're just returning that industry back to 20% VAT. So, which is where they were anyway, like the rest of us. Business rates, not really an area us accountants get too involved with, but there was a lot of discounts there for rates by the local councils for businesses. So whether you were an office, you know, small factory, anything like that. So they're all coming to an end now. I think some businesses had no rates to pay. I think it's now creeping in, so it's 50% to pay. And I think the slide there gives us some information on the multipliers that they use to work out rates as well. So I would just say if you're doing your budgets or looking ahead, perhaps go on to your local website for your council and just have a look at what it says about their rates. So that you don't get caught out by surprise when suddenly that direct debit starts coming out again at some point. And rates can obviously be quite pricey depending on your business premises. So yeah, it's a difficult one with rates. Our clients do pick our brains, but if you really are stuck on where you are with rates and the council don't help you, always have a chat with your accountant. We like to think we can do everything. Not our area, as I say, but hopefully your councils can help you and there's someone on the phone. But yeah, revaluations I think will start taking place more regularly. So I think that's where the council revalue how much they think your rates are, which unless you're using less office space, I think is only a bad thing. The idea of that is to charge you more. Green energy relief for businesses investing in green energy is something that did come about and is still around, I think. So there's some useful links on HMRC website if you're investing in energy saving items. I think there's extra tax relief. I'm not sure when that ends, but it's worth just checking if you're that sort of business that is going to invest in majorly in some kind of equipment, light bulbs, or, you know, it's if you've got a premises, I'd say, big premises. And the business improvement relief allows business making improvements to their property to not see their. This one, I have to admit, I just grabbed this morning, but yeah, might be worth a Google, business improvement relief.
It sounds like if you're making improvements to rental property, you won't get a business rates rise.
Looks like a freeze. I'm not sure if it's rental property, actually, Tess. It might be more factories and offices, I would imagine. I mean, I know we've just had all our light bulbs replaced with energy saving ones, but I might have to look that up for ourselves. But I imagine it could be sort of insulation, for example.
Yeah. Okay.
Yeah, I've got another client who spent a lot on a biomass boiler, for example. So they have a lot of wood that they waste, and then they throw the wood in the biomass boiler, and they sell energy back to the grid.
Pretty cool.
And I think they've got some extra tax back. So, right, the ones that we've known about for a little while, unfortunately, is the 1.75% increase in national insurance.
Yeah.
There was an update on that yesterday. It's not all bad news, and I'll come on my next slide. So yeah, that's kicking in next month. So employees will be paying that on their net wages, and employers will also be paying it because they pay employer national insurance. So we're moving for an employee, they're going from 12% to sort of closer to, I guess, 14% now, and employers NI is moving from sort of more like 13.5 up to 15%. So it's extra costs for businesses and individuals, unfortunately. And on top of that, they're going to hit companies as well from next year with corporation tax rises. So we're moving from a flat rate of 19%, which we've had for years, and makes our job very easy calculating the actual tax once we've got the profit, and it's moving to 25%. So all businesses, that
kind of makes sense, because you're going to make more money from businesses than from just some individuals.
Yeah, businesses, they pay the most tax in theory. You've got, you know, some large companies out there, you know, unless you're Amazon or something playing tricks with being abroad.
Yeah.
Most companies pay a lot of UK corporation tax, and it's not all bad. So the small companies will still pay 19%. So as long as your profit's not over 50,000, 19%. I think a good example is if you're making £100,000 profit, that bit over the 50, the marginal rate's 26.5%. So I was going to do something flashy on my screen and do some maths, but I'm giving up on that today. I tried it earlier, but yeah, basically you say, well, I've got 50,000 at 19%. I'll just chuck that into my calculator. That's 9,500. So if you're making £50,000, you pay 9.5 in corporation tax. But if you're making 100,000, rather than paying £19,000 in tax, you're going to have more like, I think, 22.5, 23,000.
Right.
And the reason is the final 50, you actually times that by 26.5%. So it gives you 13,250, and you add that onto your 9.5. So it gives you an overall bill of £22,750 rather than 19,000. So yeah, my advice is use that 26.5% if you're doing a rough calculation on what your tax might be. In fact, you could probably just do your whole profit at 25% if you're a big business, and at least then you'll put a little bit too much aside.
Yeah.
So yeah, look out for that. And multiple companies under different control, I think they're bringing that in as well. So if you had 5 companies before, that meant at one point it was a good way of saving tax because each would earn 50,000, but the HMRC have got anti-avoidance on that. So yeah, just be careful if you've got more than one company that you own or common control. Have a chat with your accountant just to check where your tax is going. So how are we doing for time, Tess?
We have got 4 minutes left.
Yeah. Let me see.
But, I'm sure it won't matter if we go a little bit over, because we did. We obviously started a bit later.
Okay. I'll let that one digest on the screen. Oh, I'm pretty much there actually. Yeah. So the good news yesterday was that
and sorry, just before you go on to this, just to say, if anyone's got any questions, just make sure you drop them in the Q&A section, and we can answer those at the end.
Brilliant.
Please go ahead, Mark. Sorry.
That's all right. Thank you. And so the good news yesterday was trying to remember what it was now.
Was there any good?
They're increasing so at the moment, employees or self-employed don't pay national insurance really until they've earned more than about £150 a week, which is around about 7,000–8,000 a year off the top of my head. They're going to change that now. So a bit like with tax, we're all used to having our personal allowance of 12.5. They will allow a self-employed person or an employee to earn 12,500 a year now before they pay NI. So this will offset a little bit of that gain that we've got with the extra percentage. However, just remember national insurance is sort of calculated on a weekly basis. So if you've ever got someone that's done overtime, it might be an employee comes to you and says, well, why is my national insurance gone up? I thought I could earn 12,000 NI free. If you've got an employee that's earned £2,000 one month because of overtime, that person who's on a 12 grand a year salary normally earns £1,000 a month, no NI, but then they do overtime, earn £2,000. They will still pay NI on the £2,000 on the overtime element in that example. So just be careful with the NI one, but in simple terms, someone on £12,000 a year now won't pay national insurance, whereas in the past they paid it on probably around £3,000 or £4,000 of their salary. So they're probably paying £300–400 in NI. So the government are giving a bit back there. It will certainly help those that are lower earners, but it will help everyone because it means we all start paying later. So second point there covers the self-employed individuals. So there's a little window there, thresholds, where you're not paying NI, but the government still let you keep your NI record. And NI is important for your state pension, for example. Government normally says you should have 35 years to have a good state pension. So some clients might be worried they're losing their national insurance record. I'm not paying NI, how can I have an NI record? But when you submit your paperwork once a year, your tax return, you will still be given that credit, providing you've earned in the thresholds. So providing you've earned £8,000, £9,000, £10,000, for example, more than that, you're still receiving NI credit. It's only if you've earned less than sort of 8,000 roughly that you won't get the NI record. Employment allowance. Now the employment allowance is for companies and employers, and at the moment it pays some of your employer national insurance bill for you. So they're increasing that by another £1,000. So while employers will see the extra 1.75%, they are being given another £1,000 towards it on their total bill. So it's an interesting one. It's almost, they stuck that 1.75% on in the last budget, and now they're kind of giving us, they're not reducing that rate, it's still 1.75%, but they're just making sure we pay it on less. So it's good news yesterday. And of course the duty on diesel and fuel, I don't think it's going to go far, is it? It's a few pence on a litre, and bearing in mind, I've heard rumours of it being £2 a litre at some places. They need to do more.
Yesterday it was 1.90.
Was it?
For diesel that I saw.
Do you know, I hadn't clocked how bad it was. I was in France a few weeks ago in half term, and of course it's euros, isn't it? So you get the but I got to the pump and it said over 2, because of course there it was about €2.10, and I just hadn't clocked how much it had got in the UK. I think because it was starting with a 1 still, I hadn't realised it went up so much here. So scary.
Very.
These are just general tips, to be honest. So I won't go into them in too much detail. They're not new. This is just really standard good accounting advice. Cash is king. You never want to run out of money in the bank because it will put you in a bad position. So try and do your cash flow forecasts. Try and negotiate with suppliers. See if your customers will pay you quicker. Change the terms on your invoices rather than giving them a month, say 15 days.
Yeah.
You'll need to chase them, of course, but some customers will look at the terms and think, I've got 30 days on that, or I'll wait till they chase me. So look at that, definitely. Look at your finance options. So for example, could you buy your next piece of equipment on some kind of leasing or purchase deal rather than paying for it all up front? I think the worry is if you've not got enough cash in the bank, you might miss out on something if a good deal comes along, for acquiring something if you're a trader, for buying something if you're looking to invest. And customer wise, look at diversifying. We've seen lots of clients do that and do very well. You can keep it in the same business sometimes, but why not? Rather than just be a restaurant, why not do takeaway? If you're an IT company, why not do more service contracts rather than just selling screens and computers? Accounting software comes back to that. Take advantage of the cloud, see what time you can save with doing your books.
I like your second one on the new opportunities.
Yeah.
Keep marketing.
Yeah, you very good for marketing departments.
Yeah.
Brilliant. Right, let me try and, can I unshare that, Tess, or can you unshare me?
You should be able to unshare. If you just click the share button again, there you go.
Yeah, lovely.
That was great. No, thank you so much, Mark. I feel like I've learnt a lot. It's like you say, it's difficult at the moment in terms of trying to find ways to save money. It sounds like there are a few positive nuggets in there, though, from the announcement yesterday. So trying to find the positive in the sea of negatives.
And like you say, Martin Lewis is struggling as well. And on top of that, you've got interest rate rises as well for businesses. So another one.
Okay.
Yeah, if you've got loans, for example, I mean, we will probably suffer with mortgages as individuals, but I would say I've got some clients with loads of money in the bank and they've got their bounce back loans, they've got other loans, business loans, but if you've got these old fashioned business loans and the interest rates going up, you're not earning anything on the money in the bank.
No.
Maybe start paying things off early.
Okay.
It's worth thinking about. Yeah, but take advice.
I'm quite glad I got a fixed rate mortgage for like 3 years now.
Yeah, mine's coming to an end this year, so it's not a good time.
But no, that was really useful. Thank you so much. We haven't had any questions, but Jig has put your details in the Q&A chat. So if people want to ask you anything offline, make sure you take those details down and you can contact Mark directly. So I want to take this opportunity to thank Mark again for his time, and thanks to all of our viewers for joining us today. It was great.
Thank you, everyone.
Enjoy the rest of your days.